We just finished learning the candlestick charts, the importance of them, the bullish reversals, bearish reversals. We learned candlestick addition. We learned single candle, double candle, and 3 candle reversal patterns that are going to be key. I want to give you some real life examples of candlestick addition in real life on a chart and why it is so important. On the chart to my left is a 1-minute chart, and the chart to my right is a 5-minute chart. Now you have the same amount of time as in both. For example, the time frame, as you see, runs from, the time frame runs from pre-market all the way to 8:30 in the morning, 8:40 in the morning. Now on the chart on my left, again, this represents 1-minute candles for each movement between the bears and the bulls. But through the power of candlestick addition, we have a much cleaner version on the 5-minute chart. Much cleaner, much easier, and able to recognize signs and signals. Okay? You can see again, this is the same time frame. I stopped it here at approximately 8:30. Stopped this one here at approximately 8:30 as well. You see the time, the price is 0.75 here, 0.75, and the previous day, which is 0.80. But again, through the power of candlestick addition, we're able to get a much clearer view of who's in charge. We're able to see much more clearly the sentiment of the candle. This benefit of using the 5-minute and the 1-minute. And we also want to use the daily as well, and we'll get into that in another lesson. The daily, when we start making our plans, we want to look at the daily, and then coming down to making our plan, we want to look at the intraday, and that is what's happening here. But this purpose was to show you the benefit of candlestick addition, the 1-minute versus the 5-minute, having a much clearer view. Now, once we have a much clearer view of the candles and what we want to do, then we might use the 1-minute to make our entry move once we have gotten a decision or a direction as far as the sentiment of the bulls or the bears. For example, here's another one. You have the 1-minute to the left and the 5-minute to the right. Now, this pullback here on the 1-minute could shake out a novice, could lead you to believe that it's getting ready to turn around. I mean, you had the stock go from the high 380s all the way up to $6. It began here, went to its resistance level, as we learned in previous class, of 450, and then from that resistance level, it broke through it, now becoming a breakout. It turning around in this next candle, the red candle, coming down using the 450 as support now, and the 652 is the new resistance line. However, to a novice, once it got here at approximately the 525, this pullback could have been a sign of a reversal, and you could have taken profits. Or again here at 560, this pullback could have shaken you out if you were strictly just following the 1-minute chart. However, during this same time frame, on the 5-minute chart, it would have allowed you to stay a lot more patient. It would have allowed you to see the much bigger picture, the much bigger range, because it didn't give you those 1, 2, 3 slight little pullbacks. Okay. But now remember I said that there is a time when you want to use the 5 minute, the 1 minute. Let's say this stock took off, right? And you missed it. So you were following this stock. We're on the right here. We're on the right on the 5 minute chart. Look at the cursor. You wanted to buy this stock at the break of 453 right here. But something happened and you missed it. But you still believe the stock is going to go to 654. Well, what do? This is when the 1 minute chart comes in handy. Where you want to get in this stock, you see it's putting in very large bullish candles, but where would be a good entry for this stock? Now, this is when we go to the 1 minute candle. After it broke that target that we had, the 453, 454, the very next candle, it flushed back down to that level, which could have given you a clear indication and a clear entry point, if that wasn't enough. Once the stock broke a little bit above the $5 level, at about 505, it had another slight pullback. That slight pullback on the 1 minute chart gives you a clear indication of where you can safely enter that stock if you've missed the bigger picture move. So you've missed the bigger picture move, you missed your ideal entry, but you still know that the stock, or believe that the stock is going to go to your anticipated resistance level. But the 1 minute chart can now show you entry points where you can continue to get into this stock as long as it is trending upwards correctly. This is the benefit of candlestick addition using the both 5 minute and the 1 minute. Again, here in our last example, clearly as you can see, the 1 minute looks so cluttered. It looks so noisy. The 5 minute gives us a better picture, a better angle, a better view of exactly what's going on. And we can clearly see that after this bullish move up and above to the $1 area, the $1 area was immediately met with resistance, okay? And after it was met with resistance, it flushed all the way down to 96. The bulls pushed it back up, but couldn't go higher than 99. The very next candle, the bulls opened up above at 99.5 perhaps, pushed it, but could not get as high as the previous opening red candle, also showing a good short move, because after that, you knew that if that stock candle could not reach the previous high, this was a good indicator that a reversal was going to follow. We have confirmation of this red candle, bearish candle, trading, price action trading underneath the previous green candles, giving us confirmation of a bearish reversal move. Clearly seen on the 5 minute. On the 1 minute, you can get faked out a lot with that movement and that action, going on. Just wanted to bring that to your attention.